Hello there, this is James and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a very happy Thursday. In today's program, I obviously want to talk about the event which happened just over an hour ago, which of course was the US CPI announcement and what that potentially means to the market from here onwards. But before we get into that, before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand for entering any trade. With that out of the way, try that again. With that out of the way, let's get started. So, that's a very nice comment. Thank you ever so much. Thank you. I appreciate that. We're trying our best. We're trying. But so anyway, after that nice comment. Anyway, so obviously we had a CPI reading came in, and it came in hotter than anticipated. And basically anybody now, and I have to say this, I never believed the Fed would ever comprehend doing a pivot. Okay, doing a pivot. But anybody who believed in that now clearly, surely cannot believe that the Fed's going to do a pivot. What I mean by pivot is doing a smaller interest rate hike or beginning to stop or slow down. I can't see them doing it now, not after this reading, because let's face it, core CPI, which I said during my watch along, core CPI, which I said at the beginning of my watch along, was the key to me. What's the key? Was not the headline. So much headline inflation year on year always takes the headlines. That's why it's called the headline. But it was the core, which was the key indicator to watch. And core CPI year on year was announced at 6.6% versus 6.5% expected. And here's the shocker. Here's the thing. We're breaking new records all the time now. That's the highest level it's been at since 1982. And I was 4 years old when it was at this level. 4 years old. Since 1982. Year on year again came in higher than anticipated still. Even though I definitely thought core was more important. But year on year came in higher. It came in 8.2% versus 8.1% expected. You know, in general, everything was higher. Month on month, 0.4%. Core CPI, like I said, 6.6. Core CPI month on month, 0.6%. It was expected to come in at 0.5. So here's the real dilemma. Here's the real problem that we face and the US faces, we all face, is simple as this. Inflation is just simply not coming down quick enough, and core is increasing. Core is increasing. Now, don't forget, the Fed has already been incredibly aggressive with their interest rate cycle. Very aggressive. So is the BOE. So the ECB is finally doing it, but nothing is having an impact on inflation yet. And here's the thing. We can all say, obviously, that the conflict in Ukraine is not helping. And it's not helping. And obviously, it has driven petrol prices and energy prices up higher. Gas prices, everything more expensive. But here's the thing. You know, we have seen drops, certainly in oil. Okay, we see oil rise again a little bit because of OPEC and their recent decision. But gasoline prices are coming down. But what's really hitting the core CPI and everything else at the moment is prices for services, food, and rents and mortgages are increasing. And here's the real dilemma. Don't forget, I said that housing makes up 40% of the CPI. Okay, 40% of the CPI. And obviously, we're raising interest rates. Okay, and what impact does that have straight away on the market? It has an impact on mortgage rates. And mortgage rates in the US now is close to 7%, highest it's been since 2008. Okay, so if you carry on raising interest rates, which you have to try and fight and bring down inflation, then you're just going to add more and more on your CPI, which is the 40%, which makes up your CPI. You're going to make mortgages more expensive, which means people can't afford to buy homes, which means they then rent, which then means rents will go up. So you're in a bit of a circle with this one. So it's going to be a real challenge to bring inflation down, and inflation will eventually come down. Eventually, they will succeed, but it's going to take a very long time, and it means And that means they won't be doing a pivot anytime soon. Now, because this announcement was a shocker, the market is now sort of looking at it. Definitely going to get 75 basis points in November. Market was anticipating that anyway. But now we're going to get most likely 75 in December because this inflation is just not coming down. And it's rising. So, you know, they were hoping, or the market was sort of looking at it thinking, excuse me, sorry, I've been talking, that watch along took a lot out of me. They were hoping for 75 in November and maybe 50 in December. Now the market's looking at it, going to go, no, 75 in November and 75 in December. There is a little bit, I don't agree with this at the moment. I don't think this is going to happen, but there is a little bit of chatter, a little bit of rumors that maybe, just maybe in November, the Fed might go really aggressive and do 100. Now, I'm not sure about that. I'm more on the side of the fence that they'll do 75 in November and 75 in December. 100, I don't know, and I don't think the market could handle that. So I don't think 100. But anyway, we are suffering a big inflation crisis. There's no signs of it. I mean, the one positive I will say, at least the year on year for now looks like it's peaked. You know, bear in mind we were at 9.1 at one point in the US. It's now 8.2. So it looks like it's peaked, but it's just simply the headline's not coming down. But like I say, it's the core which is worrying. It's the core which is scary because that is increasing. So that is increasing. So basically, obviously, in a nutshell, we all know what was happening. The market's come under huge pressure. It's had a little bit of a bounce, and we'll look at it in a moment. But, you know, it's come under a lot of pressure. And basically, US yields, for 2-year yields, they went up to 4.5% for the first time since 2007. But anyway, let's have a quick look at the market now. Let's start off with the S&P 500 and the indices. And as you can see, okay, we've had a little bit of a bounce, but it did drop below 3,500 points. It's managed to bounce back a little bit, like it's often happens when you've had a big drop like this. You see a little bit of the market calm down a bit. The sellers calm down, do a bit of profit taking. Those have shorted, but in general, like I say, I think overall mood is going to be pressured, and the market is likely to sort of close in potentially close again. I'm not saying that, of course, obviously potentially close in another 7 day of losses. The euro, again, came under huge pressure. I mean, look at that drop initially on that reading, has recovered slightly for the time being. At the moment, 0.96, but gold as well. Again, gold has managed to recover slightly, but it's way under that key level, which has been trading around for quite a while now, $1,667. That's the level we've been watching. Currently trading way under that now, 1,649. Obviously, gold is getting hit hard by those bond yields as well. It's getting really hit hard by that. So we've seen pure dollar strength. We have a look at Bitcoin as well. Bitcoin's the same, now under that key resistance level. Don't forget, we've been looking at it for a while. It's been trading in a range for a while between $20,355 potential resistance and $18,438 potential support. It's now currently trading a little bit under that. Hasn't clearly broken it for me yet, so we might see a little bit recover. So I'm watching $18,438 in particular at the moment. So what else is happening? Before something else I want to talk to you about, and I'll show you in a minute. And it's a question. Did we just witness? It's not been confirmed. It's not been confirmed. But remember at the time when we did the watch along, and I mentioned in this morning's video about more threats by the Bank of Japan, Ministry of Finance, intervening if volatility got too much. Excuse me, got too much. And when it happened, I was watching it quite closely. So I'll keep a close eye. When are we going to see the BOJ intervened? Well, I'm not quite sure if we did see it, because I think we might have done. Let's have a quick look. And I'll bring up the dollar yen chart now. Okay, it's still trading higher, still at 147.42. But if you see this sudden spike downwards, but it crashed. If I bring it down to 15 minutes, you can see it a bit more dramatically. See that there, where it quickly spiked down below 46 all of a sudden. Obviously, it hasn't changed the momentum of it overall, but I'm just wondering whether or not that indeed was a bit of intervention by the BOJ, because they did say they don't have a level where they think they're going to intervene. They're more worried about the volatility. When they see the volatility, extreme volatility, that's when they will intervene. There's one currency pair in particular So I'll pull up in a minute, which hasn't, it's come under pressure like everything else, has come under pressure, but is sort of holding its own a little bit better than the rest. And that is the sterling. And there's a reason for that, because there is a competition at the moment. There is a who blinks first competition going on in the UK. Will it be the Bank of England or the UK government? Will it be the Bank of England, who will now go back on what they said and will extend their bond purchasing program past tomorrow? Or will it be the UK government? Because there has been rumors, and this gave the sterling a boost before we had the CPI. Okay, before we had the CPI, and we'll look at the sterling at the moment. There was rumors going around that that Trust's UK government was going to do a U-turn on the mini budget, and that gave the sterling a bit of a boost. So who's gonna back down first? Is it going to be the Bank of England, or is it going to be the UK government? So that is the thing going on at the moment. Let's have a quick look at the sterling before I move on to my final point of today, which I want to talk about. Now, as you can see, let's go back to 30 minutes. Okay, as you can see, it's favoured slightly better. It did drop on the back of that announcement, but look at this little bit of the boost it got earlier on today. That's when the rumour broke, this candle here. When the rumour broke about the Trust government doing a U-turn, it got a bit of a boost. Then obviously it fell back down because of the CPI announcement, but now it's still hovering, and it's trying to test a key level, in my opinion, 1.112.196. It's currently trading 1.12039. So just keep an eye on this. Let's see who breaks first, because tomorrow could be a really interesting day for the sterling. Anyway, with that done, with the CPI out the way, and that's the next big one, really a big one, till obviously we have the interest rate decision. Now there's something else happening. It's starting tomorrow. It's kicking off tomorrow in a big way, and that's the earnings season. The earnings season. Could this be the market killer? Because there is a lot of trepidation about what these earning reports are going to show. A lot of companies already forecasted or downgraded their growth forecasts for the quarter already. So what would these earnings really show to the market? It starts off tomorrow, of course, with four of the biggest US banks: JP Morgan, Morgan Fargo, and Morgan Stanley and Citigroup. So it's going to be the earnings season now. So there'll be a lot of focus on that. I'll be talking an awful lot about the earnings season, because that's the next big event coming up, without a doubt. So yeah, other major events to happen, it's only really, to be honest, is the retail sales tomorrow. But like I say, the CPI is being the thing today. Be interesting to see the developments in the UK, what happens more with that, whether or not it's confirmed that the UK government does do a U-turn, or the Bank of England does a U-turn. And then at the moment, they're just blaming each other. It's getting really farcical. It really is. Anyway, indices at the moment, as they currently stand: S&P trading negative 1.11%, NASDAQ negative 1.76%, and US 30 currently trading negative 0.65. Europe, not much better. FTSE negative 0.41%. DAX currently trading negative 0.21%. Eurostock 50 in the red, negative 0.78%. Don't forget, you can ask me questions anytime you wish, or simply say hello if you like, or share with me your opinion. Tell me what you think. What you think about the CPI. I mean, for example, what do you think of the chances of the Fed actually doing 100 next month? 100. I mean, we've had the who we had to do that? The Bank of Canada's done that, haven't they? They haven't done it recently, but they've done that. Bank of England is expected to do that in November. Obviously, they're expected to do 100 as well. But will the Fed surprise us, and will the Fed do it? And what do you think the impact on that will have on the market? And did we just see the BOJ intervene? Was that intervention? It looks a little bit like it. They haven't announced anything, not to my knowledge anyway. Okay, not a problem. Not a problem. If you think of a question later, okay, you can put it in the comment section, either on Facebook or YouTube. I will see them, and I will reply to them next time I go live on air, which of course will be tomorrow morning, which will be at 8:30 a.m. UTC, discuss the European session. Then, of course, tomorrow I've got the hashtag Ask James episode. That's at 12:30 p.m. UTC. The topic on that one, don't forget, hashtag Ask James series. It's different from the Tixee Live. It's different from the watch-alongs. They're more educational about it. You think the Fed will surprise us? Well, you never know. You never know. If they were to do 100, I wonder if they would do what they did last time. Last time, what they did was they simply put a rumor out in the Wall Street Journal they were going to do 75. They sort of warn the market in advance. And yeah, they got it. Hey there. Hey to you too. Hope you're well. Like I say, I'm back on again tomorrow at 8 a.m. UTC. Discuss the morning session. And again, later at 2 p.m. UTC. And I forgot, like I was saying, I will be doing the next episode of Hashtag Ask James, which is more educational based, unlike the Tixee Live and Watch Along, which is more market driven. Tomorrow's topic is going to be moving averages part 2, because I have a request from somebody to have more information on moving averages, and an introduction into Bollinger Bands. So please come and join me for that. That's at 12:30 p.m. UTC tomorrow. Anyway, if there is no more questions, not a problem. Like I always say, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time when I'm going live. If you enjoyed this little video and found it interesting and useful, and you put up with me, my over-the-top enthusiasm for the markets, I simply cannot help, then give me one of these. It's nice to know that you like what I do. Anyway, till next time, don't forget, these little videos are for educational purposes only. And in no way whatsoever should be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, there are the risks at hand for entering any trade. Till next time, every single one of you, trade safe.